Welcome to Market Blaster, where we blow apart the stock market and put it back together so that it makes sense for you. I'm Forbes Markets editor John Dobus. Well, if you expected another round of quantitative easing from the Federal Reserve, you will have to wait. That was the message basically from the Federal Open Market Committee's last meeting, the minutes thereof, released 3 weeks after the meeting. There were members who said that there might need to be more easing in the future, but for right now, things are going to stand pat. The next meeting is at the end of July, going into the first day of August. That kind of a downer was offset by the fact that Spain came to terms with the EU for some money for its banks. President Mariano Rajoy, he actually increased the value-added tax, something he said he wouldn't do, but Spain is doing what it has to get the money of European and the world banks into the Spanish economy to help bail it out. Overall, stocks went lower, especially so after the Bernanke, after the FOMC minutes were released at 2 p.m. Still, you have a nice little move higher off the bottoms from June 1st at 128 for the SPY, which tracks the S&P 500 index, back down now to its 50-day moving average at about $134. Let's talk a little bit about Caterpillar, Going Hungry. Great children's book right here, The Very Hungry Caterpillar, about a caterpillar that eats things and turns into a beautiful butterfly. Things are not looking so good for Caterpillar, the heavy equipment maker. It's making tracks south on the stock chart. Nice looking truck right there. Looks kind of like the Martian landscape, as a matter of fact. Can you prove we don't have Caterpillar on Mars? In any case, Caterpillar is at a price right now, its stock is, that we have not seen since last October. That is when the European Central Bank came in with its first injection of litro and stimulated markets. So Caterpillar has kind of worn off that buzz, down now to about 8-month, 9-month low. Not alone in their desperation. Some sour diesel out of Cummins, big maker of generators right here, and engines that go typically into, a lot of them do anyway, that go into Chrysler products. Cummins said that sales were going to be not up 10%, they're going to be flat with 2011. Not good news. The stock took a hit from about $95 per share down to $83. Big move down for Cummins. What's still working? Well, if you have some stocks that are related to the farm, you're not doing too badly. John Deere. What's running like a deer? Deere's running like a deer. Check that out, above the 200, above the 50, and at the 10-day moving average right now. John Deere. Maybe it's getting a little bit of action from the big drought in the Midwest affecting corn prices, sending them through the roof. Corn prices up about 40% in just 6 weeks. Junkyard full of cars. What does that have in common with this stock chart? Well, have you driven a Ford lately? If you've driven a Ford stock, oh Lord, look at that, down to 931, down 30% in about the last 2 months. Ford is in good American company with General Motors, unfortunately, which is also down about 1/3 of its value in the past 3 months. You can't quite see this one as well. That's Tata Motors. I put 5 car companies up here. Year-to-date chart. Tata's the big outperformer. Came down hard recently, but it's still up 30% year-to-date. GM and Ford both in the red. And what's this right here? Toyota and Honda. Toyota up about 17% year-to-date. Not too bad. Let's look at Tata first. Tata had that nice run, came down hard. Look at the volume here, the red bars. People just, flooded the stock. So you've got to be suspect about where it will go from here. Had a nice run, and it's still up strongly year to date. Is it just taking a pause? Well, it's at the 200-day average. If you're a speculator, maybe you get some action somehow on Tata, because it has been so hot. Here's the Indian stock market tracked by the IIF. It's an ETF, or actually it's a fund from Morgan Stanley called the India Investment Fund. Perhaps you've got a bottom here in India. Look at that. Double bottom. The big green bars show action, show accumulation. Another car company we were just talking about, Toyota. Look at Toyota's chart. It's kind of a show of strength. Certainly nothing looking like GM's or Ford's. Above the 50, above the 200, above the 10-day average, Toyota. Maybe, the rebound off the tsunami and the earthquake, Toyota's on the rebound. It's got the higher yen to contend with, but maybe that will back off too. Maybe that's kind of a contrarian play. So a lot of contrarian ideas right here. Here's Japan itself, the EWJ. That's the iShares Japan. If you want to track the broad index in Japan, maybe we're seeing the same kind of action right here with the double bottom that we saw in India. Stocks are moving higher in the face of pessimism. It's not good news, and prices keep going higher. Crude oil was down to near $76 per barrel in late June. Back up now to 86.08. Energy stocks were actually up. And one last thing to mention, my friends, Apple. It's looking pretty shiny again. It's holding $600 per share. It's holding its 10-day average. It's got earnings in just a few days, and it's got new products on the horizon. So Apple, energy, and some farm stocks could do you pretty well.